Hey guys, it's Will here. I want to go through the markets as usual and see which way we're going, and sort of from there I drill down into ETFs and stocks. But just before I do that, I'm going to Bitcoin for a second. And what you noticed here was in January we had this rise and then super vertical parabolic type of move. You can see that when you cross this downtrend here and you're starting to see it going up above the 8 EMA is a good point to get in. Green volatility stops. And then when you go vertical, like if I wasn't in, I wouldn't be getting in when it went vertical. But when I do these little lines, when you get a pullback right to the 8 EMA and then it starts to go up again, once it crosses that, you could get in there. And now we have this consolidation period. And I started noticing that right around here, when we started to go down with the candles, I went down here and I could see the momentum. This is MACD, started to curl over and then it crossed. So that's when I knew, it was probably time to get out. And now we can see today we've broken down below the 8 EMA, down sloping 8 EMA. And like I said, we've already crossed. Stochastics are going down. So we'll see if it can break this 22,500 roughly level, which is here, and there's another lower spot down here, 22,300. So not looking great for Bitcoin. Binance and Ethereum technically are doing a bit better just because we have this breakout, but it is now below the 8 EMA, and it's down sloping MACD as well. But it had a bit more strength, and then Binance actually is quite strong. It's still above the 8 EMA, and the MACD is still above, but curling over a bit. So these ones were stronger, but I mostly focus on Bitcoin because that's the one I like. I think that one is going to be really good. The other ones I'm worried about being securities and sort of the proof of stake. But anyway, that's just a technical perspective from the charts. That's kind of what I wanted to talk about. Excuse me. If we go back to the markets, what we had here with the NASDAQ was a bit of a run since January, and then we're up above the 200. And the slope of the MACD, price percent oscillator, is really good. It's sloping, crossed over, and it's still above the moving average here. Bit of a pullback because it was getting, if you look at the lines I drew here, this line right here, we've gotten a bit away, so it's, it can pull back and come back down. But it is strong, but it's also had a good run here. Not to say it can't keep going up more than that, but for an entry point, it'd be nice to see a pullback and then a break of that pullback. If we go to S&P 500, like I said, it's crossed over. It's still above the price percent oscillator, MACD. It's above the 8 EMA, so everything looks good. But I'll talk about the macro because that's important right now. Once I go through the markets, just to explain why I'm concerned a bit. IWM had a really strong run. This was almost going vertical parabolic. So not a good spot to get into, in my opinion, until you see a pullback. I had a bit of one on Friday. Dow Jones, it's a bit flat right now. The MACD, you can see it's flat. If I draw a line like this, you'd want to see it break up above that, but there's a negative slope on that price percent oscillator, but so it's a bit flat. So if we look at the VIX, it's continually going down, but we're getting a potential cross here. And you can see, even though it crossed and went up here, we didn't get much of a bounce on the VIX, but it is potentially crossing the zero line right here. So we'll see if that continues. But the concern would be the US dollar. So you see how it spiked up a huge amount on Friday. That's the dollar index. So we had this downtrend, and it's only one day basically it popped up. Like it did that in January as well, and over here. But if we start to see this turn around and head up, then that's going to be. So what happened was there was a strong jobs number, which means that you could have wage inflation, or in ongoing inflation, which means the Fed will have to increase rates. Therefore, that strengthens the dollar. So you can see where they raise rates, and then once we hit this point where they weren't going to do too much more raising, like just quarter point, we had a long run for quite some time, like October, November-ish, where the markets have done well. But this could be, you know, it's early stage right now, but there is a bit of a rising momentum right here. So if we start to see this cross, you know, above the 50 and start to head up, I think that's going to be bad. So that's why I think the dollar strength is definitely going to determine. And if you look here, like you can have sloping trend lines from a long term, which we got to that point just a little bit below. There's also a horizontal point from back in June of 2022, where we basically reached close to that point. So it's just, you know, there's multiple support points here, but so if we see a turnaround here, that's going to be bad, you know, for growth stocks and stuff like that. So yeah, like it's not a great point in my opinion to be entering, but if we see ongoing strength after a pullback, you know, that could be an entry point. From there, if the markets look good, then you go to I have a tab for sectors, so I've picked a bunch of sectors. There's different scans I have for different things. So early entries would be like where I have a crossover. So that's where this thing, the price percent or MACD, crosses over the moving average. So that's why I'm a little bit concerned, because these are interest rate type things. So SJB is short-term interest rate. I mean, it's not a significant cross right here, and this is still in a downtrend. And TBF is longer term rates. It's pretty flat too, so it doesn't look super strong, but something to watch out for. And then there's a healthcare one, which is a bit of a safety play. So that's one thing I do, crossovers. The other thing is when 34 is greater than the 50 and greater than the 200. So these are strong uptrends. And it's nice to get in after a bit of a pullback, but you see how it's starting to curl around here. You've had this really long run. You're getting up higher with the price percent oscillator, but a lot of these things, when they're 34 is above the 50 and the 50 is now just crossing these things. So if things do well with the markets, these are things that are in a pretty good position because they're in a strong chart orientation with the moving averages. So there's a whole bunch here, but you know, there's been a pullback. But you can see how strong the housing, which is surprising, but because the interest rates are high and everything, but 34 got above the 50 and then 50 crossed the 200 back here. So this was like a 25% run right here. So once you see this pullback, you could draw a line, which is usually what I do, put an alert. I already have it on there. Right click on this line and say set alerts, and then you have alerts, and it'll text you or email you when things cross that line. I forgot to mention, if you want to get TC2000, which is what I use, you can get $25 off your subscription if you check out the link in the description, or get a free trial. There's a link in the description of the video. I've got the gold plan, and I use US real-time data as well, which is a fee for real-time data if you want that. So like the situation that I see right now is that we had a good run since January, but we're quite high up on the MACD or price percent oscillator. And the dollar strength is at this critical point. So if we start to see a rise in the dollar, it's going to affect a lot of these things. So hopefully that helps, and we'll talk to you in the next video.